Everybody, this is the top-down analysis for the Forex market for the month of November. So let's have a look here now at the higher time frames, monthly and weekly. This is the euro dollar. With the euro dollar, it actually happened what we thought it would do. After price could not break this very important par level, euro dollar, this was a test of the level where you get a rejection and a snap back to the moving averages. Here back to the 21 moving average, and the snapback often goes beyond. This is what we see, and after a snapback beyond, where we see a counter trend reaction. So now this might be a higher low, right? So that's this scenario, and we might see a higher high. Then we might actually see next year that the euro dollar breaks out of this very important range, or more probable, I think that this was just a pullback in the overall downtrend, and we're going to see actually a break of the par level, a definite break. Now we are at stop loss levels here, and the interesting part is the daily. The daily has formed an S1 pattern, and should we re-break the green line, well, that should be red actually, then there's a good chance that it actually starts to run south and fall into this free fall territory, no resistance in the way. So it looks rather bearish here, like bullish for the dollar, and we see that with other cross pairs, bullish dollar. Now as far as the yen is concerned here, the euro yen, the yen is weak across the board, and that's what we see here, right? Very weak. It's towards its way to the target level 170, and that's a very strong and smooth uptrend. These are the best trends to trade. Now let's have a look at US dollar, like US dollar strength. That's what we have here against the CAD. This is actually an S1 pattern on the weekly chart. We see a nice test of the 21 here. Well, this is range bound, but this is an important level. This is the pandemic, the corona spike high, the wick, right, in March 2020, and this becomes a magnet level. So basically price is shooting for that, and if we put a measured move here, well, we get really close, and this is the stop run level. Should we break this, well, we should see like more bullish momentum coming in, and then even break a big number, the 15,000. So here again, bullish. It's about to break the consolidation high. This is what we were already seeing down here. There was one stop run level. This is another one, and this is the third one. Well, let's have a look at some yen pairs. So the US yen is an interesting pair because we see some weird moments here in the chart, like big wicks, right, at important levels. Well, that's Bank of Japan intervention, central bank intervention. We just had the last one really like intervening, or trying to push prices below the big number. We've seen that several times during the last years. Or year. When was the first one? Well, that was end of 2020, in the last year. And well, the question is, well, central banks cannot on the long run intervene in what they want to do, because they're basically going against big waves. And here we are, well, this is a big wave. Like if this high breaks and the intervention was right at this top one level, right at that level, price was pushed down. Like if that level falls, that is a very important stop on level. Well, then we're off for new highs. And then the predetermined target from down here, well, then it gets really in close reach. What we have down here, well, that's an S1 pattern. This is a momentum move. I remember well that time when price bottomed and made this big move. Well, that was a many year long consolidation. And this is a measured move, right? Very similar to what we have here. That's a two-leg move. And we need a bit more to measure it up, right? To have an equal-sized move, and there are stop run levels from the past. So this is the US yen. Let's have a look at Swiss yen. So the Swiss is strong, well, against the weak currency, the yen. Well, that's an uptrend, and that's what we see here. Looks very bullish. So these are great charts to trade. The other yen pairs, they look all bullish. I mean, they look as we can see how the yen is weak, right? So here we've got a series of stop run levels. Like if this consolidation high, this is another S1. If this consolidation high breaks, we might gain momentum to the next stop run level, and then to the next one, and then basically to the next one. So there's a big move actually up to, well, above the 110. there's a big move in the cards for a strengthening of the Australian dollar, so we might get surprised with that. Let's have a look at the Canadian against yen as well. Looks very bullish. It's at an important level, right? That's a cluster level, prior highs, triple top or quadruple top, and we've got a big number. And should this break, well, again, we're off for new highs, and we should gain momentum, or we fall back. That's basically what the other scenario here, because we are range bound, right? It's not much trendy, like looking back for more than 10 years. So I mean, the longer we stay here, we might even put in a consolidation. That the longer price stays up here, or the higher the probability that we'll actually break out and run, and then this becomes obsolete. This steep pullback. Let's have a look at the at the Swiss pairs, CAD Swiss. So the Swissy is strong. Well, there was some weakness, right? So we've got a counter trend rally, but overall it's strong. The prior high was respected. This is a lower high. Now we're back at this important level. It's at the quadruple bottom. And should we break lower, well, this is why the error, well, then we basically run for the next levels lower. Swiss strength is coming up. Same against the pound. So that's a beautiful pattern, right? That's an S2 pattern, consolidation on a horizontal line. Well, that broke, and this basically tells us, well, that the target is down here. It's the par level. These are stop run levels, and we should actually, if we continue lower, like if we break this low after pullback, like price breaks out, pulls back, if it breaks to a new low, then we should actually see how price goes beyond the par level. We're looking for a momentum move of that sort. So very, very strong and dynamic momentum move here with a weak yen, weak pound, and a strong Swiss. Let's have a look at the US, the Swiss against the US Swiss. This is a long-term chart I've been talking about for many years. This is an S1 pattern. Well, it's grinding lower, right? Slowly lower, putting in another S1, nicely touching here, like finding resistance with the 200 on the way down. There's a lot of room to go lower, especially if we look at this long-term chart, like more than like 25 years back. I was always wondering what could happen, right, for price to move, like for the funds to move more into the Swiss franc than the US dollar, because both are crisis currencies. But with the Middle East breaking out and the US getting more and more involved, as well with the Ukraine and Russia, well, I kind of understood what might happen, right? So we could actually see more geopolitical events coming up, and more with the US getting more and more involved. If that happens, well, then more money flows into this relatively, right? Flows into the Swiss franc than in the global reserve currency, which is the US dollar. So something looks like it's about to happen. Let's have a look at the last one, Swiss again, the Kiwi Swiss. Very bearish chart here at an important level. Again, that's the Corona spike low, right? So we're just testing that. That's the stop run level. Well, we got to the target that was laid out back here, up here. We got to the target, pull to the target, and now it's about to push through. Can we break to a new low? Well, then we should see momentum picking up. So that's it for the month. It looks quite interesting.